Good evening, you're tuned into Bizworld. Sarawak is set to become a major producer of green hydrogen energy in the region through the opening of its 2 green hydrogen plants by 2027. According to Sarawak's Deputy Energy and Environmental Sustainability Minister, Hazlan Abang Hipni, the plant development would fulfill the demand for green hydrogen that is growing rapidly as countries around the world look to decarbonize their economies.
So we are going to have 2 hydrogen plants in the very near future. One is by a Korean company, the other is by the Japanese company. And we will be able to produce our first 100,000 times 2 is 200,000 tons of hydrogen per year by 2027.
He added that the development of these plants will also ensure that the country is on the right track to achieve its commitment of zero net emissions by 2050. In the Asia-Pacific region, demand for green hydrogen is expected to grow by 50% per year over the next decade. It is estimated that hydrogen will generate up to 30 million jobs by 2050 and $2.5 trillion annual revenue boost to economies worldwide. Hong Leong Investment Bank HLIB Research has given an overweight recommendation on the renewable energy RE sector, given its strong potential growth from an apolitical multi-year energy transition theme. The key catalysts include the Corporate Green Power Program Awards, Budget 2024, and future roadmaps or implementation plans. HLIB Research believes the growth of environmental, social, and corporate governance investing could drive a re-rating of RE stocks with a tepid supply in the Malaysian market. The biggest sector uplift, perhaps, came from Economy Minister Rafizi Ramli's announcement. In addition to RE targets outlined by the Malaysia Renewable Energy Roadmap, the government is looking at an RE capacity share target of 70% by 2050. Next, Malaysia's Industrial Production Index, IPI, rebounded to 4.7% in May against the negative 3.3% recorded in the previous month. According to the Department of Statistics, this was driven by positive momentum in all sectors. Now, the expansion was attributed mainly to the performance in the manufacturing sector, mining, and electricity. The rise in the manufacturing sector was propelled by the robust growth of 10.1% in domestic-oriented industries, mainly supported by the manufacturing of motor vehicles, trailers, and semi-trailers. Meanwhile, the increase in output in the mining sector was induced by the gain in both crude oil as well as condensate and natural gas index. Global sales of total semiconductor manufacturing equipment by original equipment manufacturers OEM is expected to bounce back next year. This is from a projected contraction to $87.4 billion this year, following the industry record of over $107 billion in 2022. Global Industry Association SEMI said the expected 2024 recovery to $100 billion will be driven by both the front-end and back-end segments. Now, SEMI President and CEO Ajit Manocha said projections for robust long-term growth driven by high-performance computing and ubiquitous connectivity remain intact. China, Taiwan, and Korea are expected to remain the top 3 destinations for equipment spending this year and the next. A Fitch Solutions company, BMI, held a positive outlook for consumer spending in Malaysia, saying it is expected to grow by 5% year-on-year in 2023. This as the economic recovery feeds into strong real consumer spending growth over the full year. BMI said at 866.6 billion ringgit for 2023, real household spending has improved beyond pre-COVID levels of 755.1 billion ringgit in 2019. It also said real housing spending over 2024 will grow 5% YOY to a total of 910 billion ringgit based on 2010 prices. Furthermore, consumer confidence levels have largely been steady, reflecting a positive consumer mindset, even as inflationary pressures in certain commodities, such as food and fuel, weigh on low and mid-income households. It said latest retail sales data has been slowing since June 2022, but remains positive and high at a rate of 12.9% YOY in April 2023. That's all the time we have for Bizworld this time around. I'm Sabrina Zainal. Thanks for investing your time with us.